All right, so it's time for another Trading Blueprint season. This season is called Constant Evolution, and it's all about how to evolve your trading personality, how to step it up to the next level when you're ready to do so. So Constant Evolution this season is going to be broken down into three major lessons. So lesson number one, this lesson right now, is all about how to create that trust for your trading plan, how you can trust your trading plan and the various things that you can do to build that trust. The next lesson after this, we're going to move on to how to actually conduct a proper performance review. It's a little bit different doing a performance review with a trading personality that you already have. So again, we're going to break down a few different steps on how to actually conduct a proper performance review and actually make it useful for yourself so that it's something that you come back to over and over and over again. It's not just something that you do once and totally forget about it, right? That's the one thing that we want to eliminate. We want to eliminate kind of pointless, useless work, so whenever we do something within Trading Blueprint, we want to make sure that we utilize that information later on. So performance review, that's going to be the next topic after this lesson. And finally, we'll finish off with evolving your trading plan. So again, how you can step it up to the next level and build on top of that trading personality. So with that said, that's the intro for season 4 of Trading Blueprint Constant Evolution. Now let's dig into lesson 1, trust your trading plan. All right, so trust your trading plan. To build that trust, in my opinion, it's pretty simple. So at this point, you already have a trading personality. You committed yourself to a trading personality, a trading style, whether it's day trader or an advanced day trader, or even a day trader hybrid or an advanced day trader hybrid, right? So that's something that we talked about in the previous season. Or you can also obviously choose swing trader, right? Swing trader, advanced swing trader hybrid, or an advanced swing trader hybrid. That's one of the 8 personalities that we discussed in the previous lesson. That's probably one of the personalities that you chose for yourself. So now that you chose a personality and you committed yourself to that personality, you got to do a couple extra things. This is homework for you. It's a project that you should consider doing kind of right now. At this point, you have a personality that you picked, either one of those. You built a trading plan for that personality, so you know exactly what you're looking on for on the higher time frames. What kind of analysis are you doing? Is it mainly the wave theory? Is it price action patterns like triangles, head and shoulders? Is it mainly focusing on reversal candlesticks and major horizontal levels? Or are you looking at it all? Right? So you know how to analyze the charts. Now you also know how to execute your positions and which strategies you'll be using to actually perform that execution. As a swing trader, it might be a regular swing trade, or an advanced swing trader, you might be executing with SBOs as your main primary execution, right? And same with the hybrid personality. Again, you know exactly how to execute, and if you're scaling into your positions, you also should know how to scale in. Now, with every single one of those executions, you also know how to manage it. You know what the optimal stop loss is. You know what the optimal entry is. You know what the optimal target is, right? That is that trading plan. So what do you do with it now? The next step is actually build a case study for your trading plan. So it's a backtesting project, and it's a little bit of a different backtesting project that you're probably used to, right? Before, at the beginning of your trading journey, backtesting a lot of times means just getting familiar with the charts. As an example, predicting the daily direction is a sort of backtesting that you can do, and it's something that you used to do probably back in the day, just to get comfortable with saying, yeah, based on this horizontal level, this candlestick formation, this price action pattern, I believe that the daily chart is going to go up for the next 2 days, 3 days, 4 days, or whatnot. That's daily direction prediction. So you can do that type of backtesting so that you get comfortable with your higher time frame analysis. And then you can take it a step further and actually figure out what kind of entries those daily direction predictions performed or had. Was it an IBO, ABO, CBO, ACB, whatnot? So that's a backtesting project that you've probably already done in the past, and you've collected data, and that's something that you did to get used to higher time frame analysis to get used to the strategies themselves, whether it's ABO, IBO, CBO, or any strategy. But this is different. So building a case study, now that you actually know how to execute the strategies, now that you know how to analyze the higher time frames, you took all that knowledge and you picked a trading personality, swing trader, day trader, or one of the hybrids, right? And at this point, the next thing is take that entire trading plan and build a case study around it. So this is what I mean, right? At this point, your backtesting project should look like this. You have your trading personality. Let's say it's a swing trading hybrid, right? Or an advanced swing trading hybrid. So you execute with an SBO and maybe you scale in with a CBO, an ACB, potentially an IBO, right? You know your perfect targets, you know the type of daily analysis that you perform. Maybe you're looking at the wave theory. So maybe you're trading wave 1s, wave 3s, wave 5s, executing them with SBOs, avoiding the pullbacks, and then scaling in with a CBO or an ACB on top of that SBO position, right? Let's just say that's the personality you chose, advanced swing trading hybrid. So what you can do at this point is backtest the previous year, the previous 2 years, random year. You can choose a 2009, 2007, 2011, 2013, whatever, whichever year you want, or the previous year. That would even make more sense. You know, take the previous year. So right now this is being recorded in 2020, so you might want to backtest 2019 as an example. And what you would do, the backtesting that you would do, it would be fully based on your trading plan. So if you're executing with SBOs, then you're simply looking for those SBO entries and you're logging them. You're taking screenshots, you're logging it in your journal, just like you would with a normal live position. So you take the screenshot, so you analyze the chart, you find the setup, take the screenshot and log it into your journal, right? And then the same thing with the scale and you just continue, right? So you pretty much create yourself a log of positions. And I would say keep on backtesting till you have about 100 positions that match your trading personality. Not based on the strategy, right? Not 100 positions for an IBO or 100 positions for a CBO or 100 positions of an SBO. I mean, 100 trades in total that fully match your trading personality. Targets, stop placements, executions, scale-ins, right? Management. It should all match your trading plan. It should all be based on your trading plan. And then once you complete that, once you have that 100 examples, and 100 is just a random number, I think it's a nice, big, even number. It gives you a lot of data, a lot of information, right? So what you do with that now is pretty much create yourself a case study, right? So go through that information, go through that data, and now find insights, right? Additional insights that you potentially might not have come up with when you were actually initially building that trading plan, right? So now that you have 100 examples of trades based on that trading plan, you can go through it, right? And get insights. Also create yourself examples of how this trading plan is supposed to be executed. So an example for every single type of execution, example for every single type of management that you utilize within your trading plan, right? And also run some normal analytics, strike rate, pretty much analytics based on the performance of that trading plan, the performance of that backtesting session, those 100 examples. How does this trading plan perform? What is the strike rate of this trading plan? What kind of return did this trading plan create or return over that period of time? What kind of, everything, just any type of metric that you can think of that you utilize right now that you keep a track of. So strike rate, reward to risk ratio, average reward per trade, right? And a few other metrics that you can obviously utilize, such as the Sharpe ratio and a few other ones. I mean, you can Google it, various performance metrics, but the main ones that you want to mainly know is strike rate for that trading plan, right? So that you know the probability. When you have the strike rate and you have that 100 examples and you figure out the strike rate for those 100 examples, all of a sudden you know that your trading plan, not the strategy, but the entire trading plan, that trading personality has a 60% reward or 60% strike rate. It means you're right 60% of the time, wrong 40, right? Or 50-50 or 70-30, right? And then you also know the average reward risk ratio for that strategy, for that trading plan, 3-1, 2-1, 5-1, 10-1, who knows, right? It all really depends on the personality that you choose. When you pool all that data and when you actually do proper analytics, performance metrics, get examples for various different things within your trading plan, the execution, the management, and the examples for every single strategy, you can create yourself a package, a whole case study with the metrics, the data, the insights, the lessons, the examples, and attach it with your trading plan. It's kind of can go to the appendix of your trading plan, and now you have this whole package, right? This case study is your benchmark. It's your performance benchmark, right? It has 100 examples, and because of it has that wide range of data, 100 examples, it's a big selection of data. You can now look to when you're trading live to maintain that benchmark, that performance benchmark. So if your strike rate is 60% from backtesting, that's your benchmark. So you want to achieve roughly 60% strike rate, right? Or a 3-1 reward risk ratio, or whatever it is. You want to, when you're trading live, you want to be meeting or being close to that benchmark, right? So that's the purpose of creating a comprehensive, in-depth case study that creates a benchmark for your trading plan. You have that, and the numbers are good, if it all makes sense and if it works, right? And you're happy with it, no other tweaks to make, then there you have it. That is what you can do to create that trust for your trading plan, to build that trust within your trading plan, right? And that's the first thing that I would highly recommend that at this point you go and do. It will take you some time, but it's going to be highly worth it. And it's something that you can come back to every single time, right? Whenever you have to confirm or just review how to execute your trading plan, right? And just review the metrics and the data and the performance. The next thing, right? Step 2 is don't be irrational with the changes to your trading plan. So what I mean by that, don't make irrational changes, right? You have to commit. You build this trading plan, you did this case study for your trading plan. Step 2 is commit. Commit for a minimum of 3 months. I would even suggest 6 months. Commit to your trading plan for 6 months. You've done the case study, you've done the work, you know it works. But there's going to be periods within the market where potentially, your trading plan is going to perform extremely well month 1, month 2, and maybe month 3, it's going to have there's going to be consolidation in the market, and maybe your trading personality doesn't perform well within consolidation, right? So then, okay, now you understand. Now you go and continue for month 4, you did well, month 5, you did well, and then markets and consolidation again for month 6. Right? So now you have 6 months worth of data and information of live trading. That's why I say commit to your trading plan for minimum 3 months, preferably 6 months. And after 6 months, you will gather live data. You will compare that live data to your benchmark performance for your trading plan. Collect insights, right? Additional insights from your live trades. And at this point, after 6 months, you can consider making some tweaks, because you've already collected a large data sample of live positions. You've experienced various market conditions over that 6-month period, right? And at this point, you can have a pretty good understanding of how your trading plan performs and where you can do certain fixes, changes, adjustments, right? And implement some of those insights into your actual trading plan, right? You do that, and then you commit to another 6 months. Right? So don't make irrational changes. Don't make changes after 1 month, after 2 months, right? Let that trading plan play out. Let the probability of your trading plan play out over a longer period of time. And at that point, you will actually know whether you should be making some of those changes or whether it was just a random month of consolidation, no changes to be made, right? That's it. So that's it for this lesson of Season 4, Constant Evolution, lesson being trust your trading plan. So to really build that trust, the case study is extremely important because it gives you an idea, a performance metrics, examples, and a large collection of data of at least 100 examples of how this trading plan actually performs, right? And that information should give you a tremendous amount of trust in that trading plan, meaning that as long as you execute your trading plan mechanically the way you build it, you should roughly be hitting the same type of performance metrics. Obviously, there's going to be times where you might miss a trade, but in general, you should be hitting those same or roughly approximately hitting the same type of performance metrics as based on your case study. And the last thing, commit to at least 6 months doing the same thing over and over and over again to let the probability play out, to expose yourself to various market conditions. And after that 6-month period, look at your data, look at your insights, look at your metrics, look at your trades, and in general, at that point, decide whether you have to make any tweaks to your execution, to your management, target placement, whatever it is. 6-month commitment starts right now and pretty much as soon as you do your case study. So that's your homework. Better get to it, and I'll see you in lesson number 2.